All right, this is the last time we're going to get together, so let's make sure we've got a good idea about how things are shaping up here as we go into the close, so you have an idea about how things might open up tonight and trade through to in the morning so we can open this thing up again tomorrow. But before we do that, we're going to make sure that you stick around. 1 o'clock Central, 2 o'clock Eastern, the Cow Guy Close. We got a lot to talk about today. Boy, the market's been all over the place, as you're well aware, I'm sure. Interest rates, home ownership, we cover it all. I want to see you there, 1 o'clock Central, 2 o'clock Eastern. That's the Cow Guy Close. We're having a lot of fun. Tune us in, but that's going to be in exactly 16 minutes from right now. How about that? All right, let's take a look and see what we've got going on in corn. It was down about a couple pennies, 1.5, 2 cents last time we checked. And that's where it is, right in the middle of that, right? I got it right, straddled it. 1 3/4 cents lower. D's corn, 487 evens last. It hasn't moved. 5 cent range, right in the middle of the range. There you go. March is down 2 cents, 501 3/4. That's not moving very much anymore. Soybeans, 7 cents lower in the Nove. The 13 is well in the rear view. 1270 is last. We're about 9 cents from the highs. And I don't know, 14 cents from the lows. That'll give you an idea. 7 1/4 cents lower. That's Nove soybeans. Jan's down 7 1/4 cents as well at 1289.5. Moving on to the wheat in Chicago. The Chicago wheat, that's up 5 1/4 cents. There you go. 570 is last. Just a nickel off the highs. And about, 7 1/4 cents off of the lows. That would probably mean we're pretty much in the middle of that range too. March is up 3 cents on its own to 5.99. Trying to put a 6 handle in front of that one. Hard red, Kansas City, 7 3/4 cents higher there. D stands at 684.5, 3 cents from the highs, 14 cents from the lows. That'll give you an idea about where we stand. 7.5 cents higher in the March, right behind it to 692. Spring wheat, this is going to be the one in Minneapolis. That's up 9 3/4 cents, 728.5. Just 2 ticks, a half cent off of the high there of 729, the D spring wheat. 728.5 is last, up 9 3/4 cents. And let's get to the cotton. It was trying to eke its way back to unchanged. Close, 19 points lower in the D's to 87.56. And that is, 52 points off the low. So we have been down there. Let's bring in our next guest analyst. It's going to be Ted Seifried, Zaner Ag Hedge in Chicago. And there we go. Thank you very much for being on, Ted. All right, let's talk about, let's talk about what you want to talk about. But right now, the market's kind of heavy.
Yeah, no, I think it's a real pivotal day for markets because we were really heavy earlier in the day, and we've had a very nice bounce off of lows. Corn really only down 2 cents or so. And that's following up from yesterday's rather strong day, taking back most of the losses from the report day on Friday.
Right.
So a lot of people want to say, oh, look at this. This is the harvest lows. We have upside potential here. But I don't know. The reason for that is seasonality. The reason for that is usually we have a bounce between now and the end of the calendar year. But seasonality is something where it's like 7 times out of 10. I've heard somebody say 12 times out of 15. What about those other 3 years, though, Scott? There's usually got to be some extraneous circumstances. And I think we have, though. Look at the dollar. I mean, this is one of the sharpest rallies we've seen from mid-July to now. We continue to make new highs pretty much every day. And look at the stock market, continue to be under significant pressure. Dow Jones down 400 points right now. S&P 50-plus points. So do we have to have that seasonality where we put in this quote-unquote harvest lows? And I go back to Friday's report, seeing as much on-farm storage that we have right now, it makes me really feel uneasy about these harvest lows that everybody's really hoping we see sometime really soon. So I don't know. I think the last 2 days' activity, unfortunately, might end up being a trap for those guys that really do want to say, harvest lows are in, I'm releasing my hedges, or maybe even getting long these markets. But I could be wrong, right? I mean, corn's only 5 cents away from putting a pretty strong buy signal on a chart, a close 5 cents higher. Soybeans have bounced off their downward trend channel twice now. They could go to the top end of that channel. They break it, might start to get buy signals. So I'm really watching these markets very closely. I think today is a very important day, and how we close today is going to really give us a little bit more insight into where we go from here.
I agree with you. And I tell you, coming from our family farm, I do get up on the producer side of the bed every morning. So, I'll put that out there. That's a caveat. I understand we do have consumers out there that do like to see lower prices. However, from my point of view, I always like to see the farmer do well. And I have not liked the price action, I don't know, for the last 6 weeks, maybe 4 to 6 weeks. And I'll just tell you why. A 4 in front of corn, a 5 in front of wheat, and a 12 in front of beans. It's like they're trying to tell me that they've got the bushels, and I'm not listening to it because I want to see higher prices, right? And I've seen this movie before. Now, don't get me wrong. I'd love to see this thing
Corn's been
rally.
resilient. It's been really sideways in that time frame.
Right.
Beans are the ones that are sharply lower. So, I mean, corn kind of actually acts like maybe there's upside potential. Maybe you can say exports are better than they were 3 or 4 weeks ago. Maybe you can say ethanol margins are really good.
Yeah.
Although, what about unleaded gasoline demand? That's not good. Maybe corn has a little bit more bright spots than it did a few weeks ago. But then also, at the same time, look at the overall economy that I think has gotten worse in the last few weeks.
Markedly so. Yeah, I agree. Yeah, I agree with you. I mean, I just think it's, I just don't like those inputs. And I like, like I said, a caveat out there, I'd like to see it higher, but it might, who knows? It might not happen. But so build a plan, or at least have that in your plan. Stay right there, though. We're going to go away. We need to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge. He's in Chicago. We're in Nashville. We'll be right back after this. All right, this is the one where you kind of have to brace yourself for, right? Welcome back to Market Day Report. We're going to dive into these livestock prices, see what we've got going on, but they don't like higher interest rates, that's for sure. Look at this. Live cattle off $2.12 to $182.30, 30 cents off the lows. We've had a $2.32 range, and we're 27 cents off the low of that, right? $2.15 lower. That's October live cattle. Deese is down $2.62 to $185.72. And that's about as much as we lose going out in the deferred. So a negative day in live cattle, solidly negative day. But if you think that was negative, take a look at feeders. All right, we've got a 5 in front of most of those. October's come back a little bit. $4.62 lower in the October feeders to $248.70. We're about 67 cents from the lows there. Nove is down $5.30. That leads the way. We trade at $250.40. And look at that, we still have about 77 cents, 73 cents to the downside there as well. So that one's trading heavy, is very heavy. And then finally, let's take a look at lean hogs. We'll give Mr. Seifried about 45 seconds. October up 25 cents, 80.10. Deese down 37 to 69.12. Let's bring back in Ted Seifried, Zaner Ag Hedge. Ted, thanks for sticking around. There we go. He's got it on. It's the cow guy hat. I love it. I might have to put that on my merchandise. We can see if we can sell a few of those. All right, you've got about 30 seconds now.
Okay.
What's up?
Got a lot moving in the cattle market, apparently, unfortunately. But listen, this is where all the things that we just talked about in the segment are really coming to fruition, because not only do you have risk off in cattle, you also have the major concern of people spending less money at the grocer's counter or the butcher's counter. And that's why you're seeing as much pressure as we are. We've not been able to put in the seasonal lows in box beef prices, which I think is echoing or shadowing that concern that we just talked about. But then you get hogs really kind of treading water for the moment.
Yeah.
That might be your recessionary buy there. I know we've talked about that for the last few weeks, but yeah, I wonder if hogs find some footing on the idea man could grow here.
Yeah, trade down the value chain. You're right. Well, I appreciate you coming on. Everybody loves the hat. Thank you very much, Ted. Great input, great content. Ted Seifried, Zaner Ag Hedge in Chicago. We're going to bring it back here to Nashville and give it back over to Tammy.
Disappointed our rural radio friends did not get to see that. Yeah.